welcome to the Dukascopy Year in Review 2013. Abenomics, Bitcoin and central banks could be considered the ABC of 2013, but as the year draws to a close, let's take a run through at some of the main events which might have affected your trades. It has now been a year since Shinzo Abe first set out Abenomics, his ambitious turnaround plan for Japan. Abenomics consists of 3 arrows. The first is a monetary policy aimed at eliminating deflation. The second is a flexible fiscal policy, and the third is structural reform. The central bank also embarked on deliberate currency intervention, taking the yen to trade at record levels. After decades of deflation, the Japanese rate now sits near target, but whether the remaining arrows will hit their targets, only time will tell. As the US economy seemed to be on the brink of recovery and the fiscal cliff just a distant memory, taper talk came to the fore. However, this supposedly good news was not taken very well by financial markets, who seemed to run scared of going cold turkey from the unprecedented monetary stimulus. In May, the Fed first hinted an indication of tapering off their bond buying, and EMs certainly took the hit. The rupee, South African rand, Brazilian real, Indonesian rupiah and Turkish lira were pinpointed by analysts at Morgan Stanley at the height of the EM sell-off as the fragile 5 emerging market currencies. However, after 6 months of teasing, the taper trigger was pulled, and this time the markets were ready. Just last week, Ben Bernanke, in his last scheduled press conference, announced the beginning of the end of their asset purchasing. In a surprise move, Ben Bernanke announced their decision to scale down its massive bond buying stimulus, saying the economy is now finally strong enough to withstand such tightening. The December taper came as a surprise, but much of the news was priced in by this time. Bernanke was careful to reiterate tapering was not tightening, and future reductions by his replacement Janet Yellen will be in response to datasets. It has been a year of 2 halves for the UK economy. Just months ago, fears of a triple-dip recession were being voiced, and the sterling found itself labelled as the ugly duckling of currency markets. But sometimes a fresh set of eyes is the best thing, and Canadian-born Mark Carney seems to have negotiated the UK back into black since taking his role as the Governor of the Bank of England. The central bank is targeting unemployment rate of 7%, and with December, the goal felt that much closer as the Dukascopy TV team brought you the news that the latest report edged down to 7.4%. 2014 will ask for one simple response to one not so simple question as to whether Scotland should seek independence from the UK. Despite claims from some that solo Scotland could be the richest country in Europe due to oil revenues, polls currently lean towards remaining unified. But with still 10 months until the referendum takes place, whether Scotland says yes or no remains to be seen. Bitcoin was the front runner as the finance industry's most innovative new toy of 2013. The cryptocurrency was first introduced in 2009, but as its value increased exponentially, experts began to question Bitcoin's legitimacy as a real currency, and Germany, among others, has sought to legalise the coin. But with China banning financial companies from Bitcoin transactions, could 24 witness it crashing as quickly as it rose? Indeed, central bank action has been the talking point, but as usual, political events have also had huge sway on money markets. Independence of central banks became an interesting moot point as a result. In Italy, Berlusconi continued to grab the headlines, and the country's economic woes worsened as it went without a leader for some weeks. Strikes have also been a huge factor of the year. Turmoil in Africa over pay impacted commodity markets. Prices of gold and platinum experienced increased volatility over fears of supply. Protests in Kiev turned violent as thousands took to the streets to show their disdain against their president. The resulting unrest has hammered Ukraine's financial markets, underlining the fragile state of the economy. The central bank was forced to intervene to prop up the hryvnia and warned of further action. So currencies too weak causing problems and currencies too strong also causing problems. For much of the Eurozone, the unrelenting resilience of the single currency was not favourable, and even the larger economies such as France struggled and received credit downgrades. Subsequently, Mario Draghi's "I'll do whatever it takes" was beginning to lose impetus. That being said, debt-ridden Spain seems to be emerging from the ashes and have received plaudits from the IMF, and Ireland are looking ahead to 2014 without a credit line from the EU as a crutch, but are they really strong enough to go it alone? The saying goes, if the US sneezes, the rest of the world catches a cold, and in October, markets turned bullish as the US came to a standstill. A 16-day partial shutdown starting on October the 1st, resulting from an impasse between President Barack Obama and Republicans who demanded changes to his 2010 healthcare law as a condition for funding government operations. The shutdown took at least $24 billion out of the US economy, according to Standard & Poor's. Elsewhere, despite a landmark election win, German Chancellor Angela Merkel had to meander 2 months of negotiations and form a grand coalition before being sworn in. The delay caused concerns that Germany, economic powerhouse as it is, was holding back the Eurozone recovery. But it wasn't all bad news, as the year was rounded off with the Eurozone finally making some progress towards a banking union.
Eurozone finance ministers have reached a deal over how to ensure financing for closing down banks by creating a common backstop for a fund that's supposed to pay for winding down failing banks.
But for all that was gained in 2013, this year also marked the end of a legacy, as the world sadly said goodbye to Nelson Mandela.
Nelson Mandela, the man who became a symbol of hope and steered South Africa through the atrocities of apartheid, has died aged 95.
2013 was also a year of lessons to be learned, and Twitter probably deserved a gold star. The microblogging site used its own technology to announce going public and sought to learn from Facebook's failing a year earlier. The IPO was a roaring success, and shares hit the $50 mark despite the company being yet to turn a profit. Indeed, the craze of social media continued to rise, and here at Dukascopy we invited you to get involved in our search for Miss Dukascopy 2013. Thousands of you took part in our quest to shine as a social butterfly and get your hands on a host of fabulous prizes worth $250,000. After successfully completing tasks, our Queen was crowned at our Geneva Forex event in December, and what a fabulous night it was. If this year wasn't your year, do not worry, as we've had so much fun, we're doing it all again, and Miss Dukascopy 2014 could be you, so watch this space. So there we have it, that was the year that was 2013, but what's next? Will the US Fed avoid another shutdown? Will the ECB inject yet more stimulus? Will Yellen out Dov Bernanke? And who will be Miss Dukascopy 2014? As all of these questions are answered, the TV team looks forward to keeping you up to date, but for now, happy trading and happy holidays.